All right. Happy Friday, everyone. We are ending the week with even a a 3% Tesla pop so far right now. Obviously, leading into the week of earnings call on January 25th. And what better way to get us all pumped and ready for what we're about to see this upcoming week and really this year is going to be, bringing in one of the longest Tesla bulls that I've known that have been around, who've seen the thick and the thin of the Tesla stock, and who've been helping fight FUD over the years. Then Gary Black. I don't really know if this guy needs an intro, as he's just all over the place. He has over 30 years of investment and portfolio and research management. He's also a MBA grad from Harvard, and he also went to the Wharton School of Business to get a BS in economics. But as most of you know him through the community, just by obviously even getting on spaces with Elon and having discussions and asking questions at the actual shareholder meetings. So it's been a pleasure to just watch him from afar, but it's even better to have him here today. Hey, Gary.
Hey, John. Good to see you.
Awesome. It's awesome to finally have you. I know we've done a lot of passing over the years, so I'm glad we could finally connect today.
Yeah, me too. It's good.
Well, awesome. So I thought today, what we can do is let me just see if I can. I'm just going to share my screen, and I'm just going to show a quick image of the. Yeah, let's just do this one, and I'm going to move it to here. Okay, allow. I'm going to show. I just wanted to quickly show some of the Tesla stock, and again, I can just zoom in here. So today we're up 3%. We've had a pretty much, it's flattish over the month, but, as we all know, kind of what has happened over the past 6 months. But it has been really cool to see, again, 13% on the past 5 days, really to see this rally. So I would love, again, Gary, for you to just kick us off on what you've been seeing, again, seeing this rally, if there's anything that you're, very conscious of that it's driving versus, what your expectations for this earnings call is.
Yeah. Well, I think the rally we've seen off the low, I think we got down about 101. Literally 2 weeks ago.
Yeah, that was crazy.
That
I was like, don't break 100.
That was a steal. But, you've seen this huge rally because normally when there's price wars, and we'll call this a price cut, not a war, the market leader initiates it. And here Tesla initiated it. My history with price wars is the market leader, when they do it, usually wins because they've done the calculus to say they can get more in volume back than they lose in pricing and margin. And so we were very much a proponent when we saw it because they were just getting crushed in fourth quarter. They barely got 400,000 units in the fourth quarter, and they promoted the hell out of the product both in China and the US here. So we were pretty happy that they actually cut price because it shows the long-term thinking. And as you know, when you sell more EVs, you can sell more software, you sell more FSD, you sell more insurance, you sell more of everything, and they regain market leadership. And so we think that's why the market has responded favorably to the price, because even though the estimates have come down, 15% give or take since they first cut price in China, and then a week later they cut in the US. So I think that's all good. And I think, as we get into earnings next week, we'll probably hear more about the price cuts and why they did it and, the progress they're seeing. But from what I could see, the stores are full. China's full. I was in the Tesla store. What was it? Martin Luther King birthday here in Chicago. It was packed. And I think, look, Elon's always had this view that you got to get EV prices down to where ICE cars are, and he's getting there. And I think there's probably some raw material cost declines that have probably helped make that decision. But, this worked in China and it's going to work in the US. So I'm pretty pleased by the progress so far we've seen.
Yeah, I mean, it's especially with the crazy rallying of prices. I remember 2021 and 2022, there was just all these price increases. And I think actually the price decreases were back down to kind of roughly that 2021 pricing, excluding the federal tax credit. But yeah, I think it's obviously really important for Tesla to kind of stay on top of on top of these things.
Yeah.
Especially for the earnings next week, is what's top of mind for you? What are you hoping to hear? I don't know if there's a couple of key buzz
Yeah.
points. And then obviously you've been through a lot of these. Like, is there a couple of those points that they may not even actually hit on that could potentially disappoint?
Yeah, I don't think that earnings themselves are that important. I think the street's at about, for we look at non-GAAP, fully diluted earnings, the street's at about $1.13. We're at $1.15. People are going to look at the automotive gross margins, X the reg credits. I think we're at about 26. I think the street's a little higher than that. We'll look at the average selling price. Things are going to be unusual about this quarter. There'll be a release of deferred revenue for FSD. That'll probably be about $1 billion, but all the analysts, including myself, will back that out. So you don't get too excited when the number comes across the tape, because it'll probably be in there, but then everybody will back that out. And I always look at quality of earnings, like how much is coming from reg credits. So if you see a number that's north of 300, that's a big number. It's not that people will back it out, but they take that into consideration. I think the bigger issue, quite frankly, is going to be any kind of guidance that they give for 2023. And so with the price cuts, I would expect to see volumes. It'll be, we're going to have a 1,314,000 for 2022. They've already announced that. I'm looking for about 1,009,000 for 2023, which is about a 45% increase. It'll be interesting to see if they give any guidance. They probably won't. They probably learned the lessons. Don't guide, after Zach guided fourth quarter, and that kind of blew up on him. I wouldn't guide. I think it's a mistake to guide that much. Just say, look, long term, we stick with 50%. And then the other thing that's happening, you got this investor meeting on March 1st. That'll give Elon and Zach license to punt any question they don't like. They can say, well, we'll talk about it on March 1st. So I don't think we'll hear much about mega packs, which is kind of the new thing that everybody's kind of focused on. And because Lathrop, the facility in California that opened up in the end of third quarter with 40 gigawatt hours of capacity, I don't think in the fourth quarter you're going to see that much on it. So I don't think they'll talk much about it. I think they'll save that for March 1st. So I guess I'm looking for next week. It's probably going to be a boring actual quarter, because you got the March 1st meeting and they'll punt anything they don't want to talk about to there. You might get some update on, where is FSD with, the wide release. But I don't expect we'll see much until March 1st. I think they'll probably wait until then.
So as far as what you're concerned, do you think they'll give a range, like a 40 to 50% range of growth? Or do you think they'll just, again, kind of go, like, just hopefully they don't give an exact percentage?
Yeah, I don't think so. And again, like when I look at what the street's done since the price cuts, and the street is always wrong, right? They can't get this stock right because I don't know what it is. They're just not, they're just never right. And the street has taken estimates down pretty dramatically. Like I said, today they're at 450 this morning. I'm at 5 for 2023. And when I was trying to figure out, like, where are they different from me? They're actually higher on average selling price. They're like 47, and I'm at 40. No, they're at 48. I'm at 47. And the street's at 25% gross margins. Remember, gross margins ex reg credits in first quarter of 2022 were 30%. So, fourth quarter, the volumes are 405. So in theory, the gross margin should be higher than where they were in the third quarter, because the volume in third quarter was only, I think, 343, 344, something like that. And usually you get some economies of scale when you produce more, but there was so much promotion going on, both the US and in China, that's going to be an interesting number to look at. But again, the fourth quarter number itself is not as important as where will it be going forward. And I can't imagine management giving that guidance, because, the price cuts were pretty dramatic. Let's say they averaged 12%. And really what happened is Model Y, this price gap between Model 3 and Model Y essentially collapsed. So you're looking at I think on performance, you're looking at a $3,000 difference. But Model Y, because they took it in the US down to, I think it was 56.9, it's not eligible for the $7,500 EV credit. So that's a question I would have. Why didn't they just go to 54.9? But Model 3 performance is at 53.9. So, you want to at least establish that Model Y should be priced. It was priced, much higher. And so that'll be a question I would have. I would have a question on, what would it take to declare victory on this? So my experience with price wars, they're usually short. Usually the market leader wins. And you referred to the Reuters article. Tesla has the most. There it is. They have the most that they could cut if they really wanted to push the price down. For instance, Model 3, for instance, we've started to see inventories creep a little bit back up. If they want to take Model 3 down further to get it under 40,000, they could do that. I don't expect them to. I think they're going to let this sit and see how it plays out. But they have the most profit they could give up if they really wanted to push this price war. So what I'm thinking is, if nobody else really follows, that's good for Tesla. They'll gain a lot of share. We could get a number for first quarter volumes north of 450. Some people are even saying 500. I don't think we'll get to 500, but I think that would be victory. And then you'll see them start making adjustments to price, probably most quickly on Model Y, because Model Y, the inventories have come down, I think, 2/3 since before the price cuts. And that'll be enough for them to declare victory, and then estimates can start going up. I tell people as a growth manager, and we own about 30 growth stocks, and I've been buying growth stock for 30 years. You want to see when estimates start moving up. And estimates have been moving down now since probably October, when they missed, remember the third quarter, they missed the volume numbers because of China. People were waiting because they thought that the price was going to go down. You want to be buying a growth stock when you think the numbers are going to start going up, either because you think it's the end of the bad news and all the bad news is in the stock. And today we're at 450 and the estimates have been coming down pretty sharply. Or you want to buy it when estimates are going to go up because there's some new innovation that the street just hasn't picked up on. And to me, the street has not picked up on megapacks at all, even though you got all this new capacity coming on. The street, for instance, for 2023 energy generation and storage, they've only got about, I think the number for 22 is about 3.7 billion of revenue. The street's at like 4.5 for 2023. Even though if you just do simple math and say, okay, I got 10,000 units of capacity come on, even if you only sell 5,000, at $2 million a pop, that's $10 billion of incremental revenue. So the street's ignoring it, or they're just not thinking it's going to ramp up that quick, one or the other. So I think that's going to be probably the big aha for 2023. And then, of course, Cybertruck is something everybody always wants to know, when's it coming, including me. I've got a what is it called?
Tri-motor.
Tri-motor. I got a tri-motor on order.
Which is now probably a quad motor.
Yeah, I would love to get that thing and take it through Chicago and, valet park it in the front of Trump building and let all the kids take pictures of it. That's my
Wrigley Field.
Yeah, that would be very cool. But I don't have much in my model for 2023. I think I've got 10,000 units, even though there's, I know, 1.3 million pre-orders, because you only had to put $100 down. But I would hope we get that out this year. And then I don't think we'll hear much about the cheaper, we'll call it $25,000 to $30,000, called a subcompact, for lack of a better word, with a hatch. I don't think we'll hear much about it, because I think if you announce it too early, it's gonna cannibalize Model 3. And so you want to go into that segment. I had this discussion with a very well-known sell-side bear yesterday. And he actually drives Teslas. He's got 2 Teslas, and he's bearish on Tesla because of valuation still. And he's been bearish for 5 years. But we had a long discussion about that. And he says, well, why wouldn't they just announce that? And I said, because they announce everything early. I said, because you don't want to cannibalize Model 3. You want people to say, when it's just about ready, okay, that sounds like and you want it to be very differentiated from Model 3. You don't want it to look like a Model 3. That's why I bet it's going to look more like a smart car. And it'll be cheap. And look, you expand the TAM dramatically when you bring that car out. And that's how you get to, let's call it 10 million units is our forecast by 2030.
Yeah, no, I think this was the tweet I think you had mentioned with the sell side bear.
Yeah.
But so I think for you, would you say that, do you think what's going to happen after Q1? Do you think there's going to be more price cuts because, or do you think that it's going to be one of those things where maybe they'll even raise it a little bit more? Or how do you think that things are, because I think a lot of the price cuts only go through Q1.
Right. And I think a lot of it depends on what Treasury and what the IRS comes up with in terms of, we'll call it final guidelines on what's eligible for the $7,500 credit. And so again, Model Y performance, they took the price down to 56.9. It's not eligible. if, the long range Model Y, which right now they're saying a cap is 55, that's, now it's eligible, right? The long range Model Y is eligible. All the Model 3's trims are eligible. Although, again, they have to decide, is the Model 3 standard range with the LFP battery pack, is that something that's going to be eligible after March? And I think once we get to March, we'll know that because Treasury will issue its guidelines. So, I mean, to answer your question, I think we're going to have to wait till March to see. What I can say, the early read is in the U.S. You've seen inventories come down for Model Y. They came down for Model 3, but now they've started to back up a little because, they are still producing, let's call it 5,000 units a day that, you've got to sell. And so if they were to take Model 3 down further, which would surprise me this early, that wouldn't be a catastrophe, but I don't see that. I don't think they need to do that because right now the standard range Model 3 in the US is 43.9. So what are you going to do? Bring it down to 39.9 and you get $7,500 credit? That just seems too much. So
Yeah.
I don't think so. I think my experience with price wars is when nobody responds and you're not really seeing much response in the US, usually the market leader wins. And I've talked about Marlboro Friday, which was my first gig on Wall Street. I had to deal with that. And, I was lucky because I had a sell on Philip Morris, which was the market leader. And it went all the way down because they kept every quarter they were, promoting the hell, just like Tesla did at the end of fourth quarter. They're promoting the hell at a Marlboro cigarettes at the end of every quarter. And then they finally got smart and said, let's just take the price down. And the stock went down 26% in one day. And I went to a buy and everybody else went to a sell because they all had buys on the stock. And then Philip Morris gained a boatload of share back and the rest is history. And the price war was over within 6 months. And I would bet that come third quarter, you'll probably see Model Y prices start to inch back up from where we are today.
Yeah. What would you say too, especially like, I think it was Arcimoto that obviously is now probably going to file for bankruptcy.
Right.
And do you expect a lot of consolidation and actually this potential recession or recession that we're really in actually benefit Tesla? Or how do you think the market is going to change over the next year with, the competition and other players?
Yeah, our economic outlook is a shallow recession. We're not buying into the deep recession scenario I know that Elon has. I don't see it. We had, people forget, last year, first quarter, second quarter, GDP actually went down. It was down 1.6 in the first quarter, it was down, I think, 0.6 in the second quarter. That was technically a recession. And then third quarter, GDP was up 3. Fourth quarter will be up 1.5, let's call it. And if you look at the labor market, it's pretty tight. So I don't see, and now China is, they're getting out of COVID, they're expanding. The war at some point in the Ukraine will be over. I just don't see us having a deep recession. And the Fed, which got us into this because they aggressively pushed up rates, I think more than they should have. They could pivot at any time if we don't have the soft landing. They're all trying to get to this magical soft landing where GDP in first and second quarter goes to 0, but no recession, and inflation comes down. Now, inflation's already coming down, and that's what I don't think people understand, that the Fed has a target of a 2% annualized inflation. If you look at just the last 6 months and you look at headline inflation, multiply that times 2, it's about 2%. Now, a lot of that's driven by energy, but even on the core side, if you look at their favored metric, which is the PCE core, and again, look at the last 6 months times 2, it's about 3.5%, and it's coming down pretty quickly. So I just don't see the Fed continuing with the damage it's doing, and it's really pushed rates up quicker than any time in the last 40 years. I think once they see that we're pretty close to 0, kind of stall growth, which I think we could get there in the first quarter, maybe, I think they'll say, okay, enough, let's pause. So I think on February 2nd, which is the next Fed meeting, first and second, you'll see them raise rates again by 25. So again, Fed controls short-term rates, not long-term rates. So the federal funds rate, which is right now 4.5 to 4.5 range, will go to 4.5 to 4.75. And then March, I think 14th or 16th is their next meeting. You'll probably see another 25, and then it'll be 4.75 to 5. But meanwhile, the 10-year Treasury, which is what I look at and what most investors look at when you're trying to think about equity valuations, is down to, it's up today, but it's about 3.5, down from 4.2. So I just don't see that deep enough to stall the economy. Okay. And so I know people talk about auto payments. If you buy a car and you have to make payments, and I look back since October, and they really haven't gone up much because again, the 5-year rate, the 7-year rate, which are the most common, 4-year rates probably common too. Auto loan rates, they really haven't gone up that much. It's what's gone up a lot is the short-term rate, which is the federal funds rate. But if you look at 3, 4, 5, 7-year auto loan rates, they really haven't moved up that much since October. They've moved up since 2020, but since October, they really haven't moved up. And so your average loan payment for a car hasn't really increased all that much. So back to your question, I don't see us getting into a nasty recession. I don't know what it's like out there, but here in Chicago, you go out to restaurants, everything's packed. It doesn't feel like COVID. It was eerie to walk around in Chicago. There was nothing going on at all. And now, it's cold out here in Chicago. It's 20 degrees and every restaurant's packed. Michigan Avenue, which is the primary luxury avenue here, it's like Rodeo Drive in LA, it's packed and it doesn't feel at all like a recession. So therefore, I'm going to go with shallow recession. Fed can pivot. When the Fed sees us kind of at stall rate on the economy, it will, stop raising rates and pause, and then we'll be fine for the rest of the year once it pivots. So that's my call.
Kind of going back to some of the margin calls. Well, sorry, actually some commentary. I would say out here, it definitely doesn't so in the Bay Area, it definitely doesn't really feel like a recession, but there's just been tons and tons of tech layoffs. So I think it's kind of, my LinkedIn feed is just everyone getting laid off and asking for help, open to work and all that other stuff. So it's weird. It's like I'm seeing the signal of it on literally LinkedIn, but then when you walk outside, it's kind of feels different. So it's a weird, it's like, Microsoft and Amazon doing huge layoffs this week, and maybe even more coming from some of these other tech companies. But yeah, it'll be interesting because, as you said, sure, when you're going to the airport or when you're going out to eat, lots is going on. So yeah, I don't know.
And
Sometimes
the Fed
I feel like
control that. The Fed has raised rates quicker than any time in 40 years. If the Fed wants to stop raising rates, that's the signal. It's not that they cut rates, it's just they stop. And so you got probably 2 more rate hikes, February and March, and most of them have signaled this, then they're going to pause and see what kind of damage they've done. And, in the meantime, so end of March, we continue to get monthly job reports so you can see how many jobs are being created. And then, you get a GDP number. And if the GDP number is close to 0, and we'll have a fourth quarter GDP number by then, the Fed's not stupid. They want to have what they call a soft landing. They do not want to push us into recession. And I think myopically, they believe they can get inflation down to without, a recession. That's like landing an aircraft. I can't see that. I could see us having, 1 to 2% GDP decline in the first quarter, maybe the second quarter. And then that's it, because at that point, the Fed will stop and then the Fed will cut rates probably in the second half. And then we're off again. And that to me is, maybe that sounds too Nirvana-like to you. But and to your point, you do see in the tech world lots of layoffs. You're seeing Google announcing today that they're, cutting people, and Apple has announced, and a lot of tech companies have announced. But in the non-tech world, we haven't seen those type of big layoffs, to be honest.
Yeah, no, it's I think a lot of these companies probably grew way faster than
Too many people.
Yeah, exactly. But as we kind of either head into next week, I think the other question is more of do you think, because I don't know if you mentioned that Wall Street is kind of keeping potentially the margins roughly their margin estimates the same, or do you?
They're down a little bit. They're down a little bit.
Okay.
So if I think for fourth quarter, we'll see a number of auto gross margin, probably around 27 ex reg credits, which will be a little bit less than, I think third quarter was 27.6. So it'll be down a little bit because of all the promotions, but you had a lot more volume produced in the fourth quarter and the third quarter. I think for 2023, the street is now at 25, which is, I'm a little bit below that. I think I'm at 24 and a half. So people have taken their margin numbers down, but they're not at 18 or 15 or anything, because you just think about the cost structure. You've got, let's say it takes, 60 hours labor hours to make a car. Okay. And you make up a number, $50 or $60 an hour. That's $3,600 to make a car. There's raw materials that are probably at least, I'm going to make up a number, but it's, probably 8 to 10 grand in the car. And you got the overhead allocation. It's really the raw material costs that are driving the cost down. And, a lot of raw materials are down 20%. So you've got to factor, and that's what the street isn't doing. The street is not factoring in, and again, I had this discussion with the sell side guy yesterday. They're not factoring raw material cost declines, and they're not factoring in big volume increases. And if you get more volume, if you get a 450 or 500,000 print for Tesla for first quarter, I guarantee that's going to, because you're allocating the same overhead across more units. That's going to help the margins in the first quarter. And I don't see the street doing that. When the street has cut their numbers, they cut price. They basically are not putting much raw material cost declines in, and they're not factoring in volume increases. I looked at yesterday where the volume was for 2023. The street's at 1855, and they were at like 182. So are you assuming that you got a 15% or 13% price cut, and you're not going to get any volume increase? That just makes no sense to me. And so the street doesn't like Tesla in general. I mean, there's people with buys on it, but they've always been skeptical of Elon, and they've been wrong. And I think once again, Tesla's going to surprise on the upside, but it may take another couple quarters for people to see that. And so when I think about 2023, it's, how much volume are they going to get? Is it, if they get 50%, then you're up at 2 million. Okay. Megapacks, how quickly can it scale and what kind of margins are going to be there? And really, how quickly can they add new gigafactories? Because, to get to, say, 10 million units by 2030, which is in my forecast, they got to start buying gigafactories at least one a year with 1 million, let's call it 1 million units capacity, like, Shanghai type capacity, not Austin and not Berlin, which have lower capacities. They got to start putting them up to get there. And that's the execution. So that goes to what are the catalysts for the stock? People want to see Elon give up running Twitter. And people say, well, he's always run more than one company. He's run Neuralink, he's run SpaceX, he's run, but he started those companies and he put in the leadership team. He knows these people, and Twitter's a total disaster. And, as I've tried to say back in April, why are you doing this? Why do you want to buy Twitter? And I felt very alone back in April when I was, admonishing him not to buy Twitter, but of course he did. And then he tried to get out of it. And to me, it's a total redo. And, you got to get the advertisers back. You got to rebuild the product. And if I were the board, this is where I would, and I'm not an attacker. I'm a friend of management. And, I think they like me. They invite me to their special events and they return my phone calls. That would be the one criticism I have of the board, that, he shouldn't be allowed to run two huge companies like this, because Twitter is a total redo. And he's got to find, and to me, this is a big catalyst. He's got to find a CEO that he can trust, who can run Twitter, who can get the advertisers back, who can build new product, if you will, monetize all the daily active users, and make it a better place, to hang out. And I think if he could do that, that would be huge for Tesla stock, because everybody's okay, now he's going to focus back on Tesla. And so that's a huge catalyst. I think Cybertruck is a huge catalyst. If they would just say, yeah, we're going to get it out by third quarter, that would be huge. And then, announcements of more gigas would help a lot. Indonesia, they've talked about. We've heard Mexico. We've heard UK.
Korea.
If they announce 2 of them, that would be great for the stock.
Yeah, no, I think it would definitely just change the game. Maybe I don't want to digress too much into this, and then we can start taking questions. How do you think, though? So obviously we're in this situation where Elon has bought Twitter. He's obviously looking for a CEO. How do you think, though, Twitter could potentially benefit Tesla, if at all?
Yeah, well, they don't advertise today. Tesla doesn't, and it's been fine up to now. But I'm in the camp that, Tesla has to move from this mindset of being capacity constrained to being demand constrained. I think it was fine to all say, we sell every car we make in years past, but it's different now. And while a lot of competition has come on and they still can't scale, Rivian can't scale, Lucid can't scale, If you look at who's scaling in the U.S., nobody's really doing what Tesla's doing, but that is changing, and you are seeing a lot more product come out of all the ICE companies. So my biggest issue is, as we think about going forward, what has to change. The board has to acquire, at least get Tesla to acquire the soft communications, PR, marketing skills in the same way that Apple did, when the product sold itself when it first came out. But, everybody's going to copy it. You got to have good communication skills. I don't want to call it advertising because that's a dirty word, but you got to have good PR, good communication skills. And that's where he could use Twitter, as an advertising vehicle for Tesla if he really wanted to. And I'm not a fan of mixing the two companies. I was not a fan of him buying Twitter. I'm still not a fan of it. And I think it's hurt Tesla shareholders, him buying it. But I think if he could bring in a real CEO who knows the business, knows the ed business cold, but who also is, tech savvy and can monetize daily active users and be innovative, then I think that's a win-win for Tesla. And it allows Elon to get out of the muck, because right now he's, I don't know, I hear he sleeps there on the 8th floor, which is crazy to me.
The good thing is, though, is that the Tesla engineering team is still very heavy in Palo Alto, which is literally like 30 minutes away. Right. So I think sometimes it is easy for people. I think, I mean, I wouldn't be surprised if he's even, taking meetings, or maybe some of the engineers are actually going there for some of their meetings. Again, I don't know, but it's actually the engineering and autopilot team are still based out of the San Francisco Bay Area. But yeah, I hear you. I think, there's definitely some there, a lot going on with Twitter. I mean, it's a 44 billion yacht that was clearly losing. I think he said 3 billion this year, and
well, it probably still will. It probably still will. And look, I think there's a misperception that this is a product problem. I don't think Twitter, the product, is that damaged, to be honest with you. I think it could be better, but I think, trying to figure out how do you take 260 million users and get them to pay you, we struggle with that every day. I have a lot of followers, and it's hard to monetize Twitter. It really is. And I think he's learning that it's hard to just get people to pay $8 a month because you give them a blue check. You got to figure out ways through e-commerce and, getting slices of people selling more products on Twitter. That's where the money's going to be. But 92% of Twitter revenues are still from advertising. And to me, one of the big mistakes he made was, insulting advertisers and saying, I'm going to name and shame you. And a lot of them left. And these are big advertisers. Now, Apple came back, Amazon came in. But for him to be able to walk away from Twitter and make money on his, I don't know how much he's got in the 44 billion, let's call it 15 billion. He's got to get the advertisers back in. And look, you got two big events coming in 2024, right? You got Olympics and you got elections. And so getting this thing in shape so that you can actually monetize those two events is huge. So it could still work. He paid a lot of money for it, but it could still work if I think if he brings in somebody who can actually bring the advertisers back. And look, Elon has been smart, and he's brilliant. He sees that by tweeting, very right-wing leaning type stuff, it pisses off a lot of the people on the left-leaning folks on Twitter. And I think most CEOs don't do that. Most CEOs kind of, whatever their political agenda is, they kind of try to stay in the middle, so you don't piss off your customers. And that's been a challenge, but I think he's learned. I don't see him tweeting right. And his politics are very similar to mine. I'm a libertarian. I believe, government should stay out of the way, but he's just got to let it go and, focus on what he can control and stop trying to change the world when it comes to political leanings, in my mind.
Yeah, definitely. Let me, so I think there's been some questions that we've had from the audience. And so we'll go through some of these, and actually I can post them. Let me put user.
And let me just say a couple words on the trial, because that's kind of, an event that's going on. This trial in San Francisco. So Edward Chen, who's the judge, and I've been following this pretty closely, he's already made a ruling, which makes it very difficult and remember, the suit is against Elon and the board of directors. It's not against Tesla. And the worry, though, is that if the board gets a judgment against it, and there's not director's insurance to pay for it, Tesla shareholders are going to have to pay for the board's judgment. And then the other worry is, it's bad PR for Elon, and Elon may have to sell more shares if he gets a big judgment. What I would say is, the judge has not made it easy for Elon and the board, because they've already ruled that Elon's tweet was false. And the judge has said you can take the tweet as being false, and you can take it as being a reckless tweet. And then the only thing the judge, and this is what he said to the class action, the plaintiffs, is the only thing the jury has to decide is, was the tweet material? So did shareholders rely on that tweet? So is it material? And that's typical with fraud cases. You have to show reliance. And did Elon know that his tweet was false? And so I think there is an uphill battle here. But at the end of the day, from a stock standpoint, this is a one-time event. It's not going to go into any future earnings. And even if the jury were to give, I don't know, make up a number, $2 billion, that's like, 60 cents a share. It's a one-time event that people will back out. And you'll get the knee-jerk reaction if there's a big verdict. But people will think about it and say, well, it's not going to go into future valuation. So why is this important? And he's not going to do it again. So I just think it's a bunch of to do about nothing. But right now, that seems to be the only thing that the press is talking about. And unfortunately, it is what it is. And until we get a verdict in 2 weeks or something, that's what they're going to focus on.
Okay. Would you say that that the battle to actually win this case is like really steep, and it's probably it's most likely going to rule in his favor? Would you say?
I think they're going to lose. Look, I always try to call. I felt that he was going to lose in the Delaware Chancery Court, and that they were going to the Chancery judge was going to force him to buy Twitter, and that turned out to be true. And I know there were lots of people saying, no, that's not going to happen. But I grew up as an analyst studying litigation, with tobacco. That was my first thing. And, look, I know my way around the courtroom. I think he will probably lose the San Francisco trial. And the judge is no friend of his. You can tell by his pretrial rulings. So Elon's going to testify today. And look, he's a very likable guy, and he's very competitive. When, he feels the things are stacked against him, he tends to work extra hard to win. So never say never that he will lose this case, but I just think he's got an uphill battle. And really what I don't know is if the jury finds him liable and the board liable, how do they come up with damages? It's really hard to figure out, because remember, the tweet caused the stock to go up, and then within a week it went right back down. And people are saying, well, they lost the lemma. But if you're the jury, how do you assess damages here? And I think with juries, because you got to get, I think there's 9 of them, you got to get them to kind of agree, or at least get 6 of them to agree, or something like that in California. How do you come up with a number that is reasonable? I don't think they're going to come up with a number like 50 billion or something. I think if it's a $2 billion judgment, I think after a while people are going to say, well, that's not a big deal, and it's one time. And it could be appealed. And quite frankly, when it can be appealed, you can settle it. So even after the award, rather than have to go through the appeal process, the class may say, hey, I'll take whatever I can get as a settlement, and it'll be over. So I just don't think it's that big a deal, but the media is making it a big deal because, look, it's news, it's entertaining. Elon's going to get up on the stand today and testify. And look, I'll watch it. I'll find out exactly what's going on because it's entertaining.
Yeah. No, fair enough. I think you shed a lot of good light on, some of those current events, especially given, it just feels like everything, there's something, I forgot what was some other case? Oh, it was the Twitter case last week with Twitter employees that got dismissed, but it just seems like it's always something with Elon. So,
well, the media, look, you get people to, when you write a headline, I know a lot of journalists, I have good relationships with most of the journalists who cover Tesla, even the ones who are pretty, negative. But when you put Tesla in the headline, that's why you see it all the time, it gets hits, right? So all you got to do, Al Root is a friend of mine. He writes for Barron's. He's probably the most positive Tesla writer. But he'll tell you that he'll try to write a story about EVs, and they'll say, put Tesla in the headline, because they know when you put Tesla or Elon Musk in the headline, you're going to get hits. And that's the way it is. People love reading about Tesla, and they love reading about Elon.
Yeah, there was that Polestar crash. into like
Right,
a house,
right. They
and
said it was a
someone said it
Tesla.
was like a Tesla.
Right, because it gets hits, and they don't care that the headlines are, because all they want to do is get people to, you know, go in and hit the headline and hit the story, and that's how they get paid. It's sad. It's very
Yeah.
sad.
Well, let's hit you with some questions. They should show up. Let me know if you can see that. Ask Gary if he can discuss some of the recent conversations he's had with heads of some of the bigger hedge fund managers and PMs
Yeah.
about Tesla.
So this sell side guy I talked to, and people can figure out who I talked to, based on my history. He is to me the most credible bear. It's not Gordon Johnson, who to me has no credibility. I'm sorry if Gordon's watching it. I don't get it. But this guy's a bear. He's a noted bear, and he's very good at being an analyst. And a lot of the hedge funds talk to him. And my conversation with him was trying to figure out, what are you hearing? I was trying to figure out who's buying the stock at 131 up from 101. And he didn't know, but he said he's never had more interest from his clients who are big institutions and a lot of hedge funds than he has today. And I've had a couple inbound calls, because I grew up in the institutional world. That's my world. From people who would never look at Tesla because it's just too expensive. But when you get down to, let's use the street at 450 in earnings, and the stock is at, let's call it 27, 28 times earnings. And as recently as November, it was 60 times earnings, and that's where it's always traded. And people, when you think about valuation, you got to relate it to a growth rate. And I'm very fond of saying, industry does not dictate PE. It's the growth rate, future growth rate, that dictates PE. So when you get all these crazies, and I know Jim Chanos and Ross are going to debate like pretty soon, like in an hour, maybe right even now. This is what Jim Chanos is going to say. He's going to say, well, you can't put a 30 multiple on Tesla when Ford and GM and Volkswagen traded 6. That's the type of question that the hedge funds are asking, is what multiple do you put on Tesla? And it comes down to, what do you think it's going to grow at? And I always go back to is, well, what is EV adoption going to be? Because today it's at 10. If you follow Norway, where it's 70, 80, you look at China where it's 25, most of Europe's about 20. If you get to a 60% EV adoption by 2030, you take 60 divided by 10, you raise it to the 1/7 power, you're getting like 35% growth, if you just hold share. And that's why I'm so focused on what is EV adoption and what is Tesla's EV share. So today, if you look at 2022, Tesla EV share actually slipped in 2022. It's about 16, 17%. But Cybertruck will help it, and having a $25,000 to $30,000 vehicle will help it. So if you can get back to, close to 20 EV share, which is where it was, you could argue if they could just hold their share as EV adoption goes from 10 to 60, you can get 30% growth. And then what multiple do you put on a 30% grower? You put at least 30 times on it. Most growth stocks trade at 2 times their growth, let's say 1.5 to 2 times. So if people could be convinced that it's going to grow at 30%, you can get 45 times PE. And that's the type of thing that hedge funds are looking at, that at 27 times, it looks cheap. And so they ask, will there be more price cuts? And, so people are studying inventories and trying to figure out, are they going to have to take prices down again? I don't think they will, but that's the type of question that hedge funds are asking. Is Elon going to leave? That would be a disaster if he left Tesla, to me. I know there's some people that want to leave Tesla. I certainly don't. He's the driving force, but key man risk is huge. And if he were to leave Tesla and say, you know what, I'm tired of Tesla, Tom Zhu is going to run it, and I'm going to run Twitter, that would not be good for the stock at all in my mind.
Yeah.
Most institutions would hate it. I would hate it. I know others are feeling different about it, but Elon is the passion and the driver of Tesla. He needs to do that. I don't want him to go to Twitter and leave Tesla.
Yeah, and especially with Tesla being his only publicly traded company right now. I mean, and not saying that he needs to rely on it, because I think he's down to 12% ownership now. But yeah, so it's one of those things where I would assume he needs to stick around. But I think also too, it's just we're still we're still early stage in Tesla, so. We'll see. One other question was, what is your assumptions on Cybertruck pricing from its original pricing versus now?
Yeah, well, it'll be higher. I don't know. I like I said, I have a tri-motor, and I think tri-motor was supposed to be at 69.9, but I'm assuming I'm going to have to pay 79 or 89. when it finally comes out, it'll probably be like Model Y, right? Because Model Y and Cybertruck were priced at about the same when Cybertruck was first announced. What was it, 4 years ago now, 3 years ago? And Model
Three
Y,
and a half, yeah.
Model Y to me is kind of a good. If you look at pickups and SUVs, they're priced about the same if you look at the industry. So I wouldn't be surprised if they price it, at or just slightly above where Model Y is. Now, it'll come off at a premium to start because they're not going to be able to make, I don't know how many orders there'll be once, people start having to fork over the rest of the money. But $100 is nothing, right? Anybody can put $100 down. And I know people that, put down 10 deposits of $100 that can flip these things. But I think you'll probably see at least, so Model Y long range, there is no standard range in the US. I think, 49 to 50, could be where you see it start. And then, add 10 for two motors and another 10, like you said, it could be quad motor, it could be tri-motor, maybe 20. I mean, you could probably get 89. What would I pay for a tri-motor? I'd probably pay 89. Don't tell me on that.
I think it's important to keep it under 100,000 because then also too you would stay under the Rivian as well, especially some of the higher trims. But once you start hitting 100, I think it's
too much. It's too
yeah.
much. And I'm still, to be honest with you, I'm surprised that they went this route. I was not a fan of, and I love the way it looks. I'm one of these, baby boomers who actually loves the way Cybertruck looks. And my partner, who's also a baby boomer, he hates it. I thought they would go traditional pickup truck and make it look like, a Model Y, but pickup. And that would have been quicker. You would have gotten out faster, but they still may go that route. You still might have that come out at some point. I just thought going this route just took so much longer than I think people expected. And you still don't know how the stainless steel metal will work, in the manufacturing process. It might be, easily scalable. It might not. I don't know. We'll find out.
Definitely. You probably get this question all the time, but what is the Tesla worth with and without robotaxis?
So I have no value for robotaxis. And, it's funny. I was arguing with Warren Redlick, who I think, he and I are now on the same page, which is good. He's a smart guy and he's very passionate, and, he's got a lot of good points, and he's asked me a lot of good questions. And, I was thinking about all the things I've disagreed with Elon and Tesla in the years I've been, writing about the stock. There's like 5 things. That's it. And robotaxis is one of them. And, the others, I didn't agree with yoke only steering wheel. Didn't agree with the timing on robotaxis. Never have agreed on no PR. Didn't want him to buy Twitter, and I didn't want him to buy Bitcoin. Those are the 5 things I've disagreed with him on, that I can remember. And robotaxis, since I started covering it, I just didn't see that as being a big value driver. And it's not that they can't get there; they will, but everybody's going to get there at some point. And so my view is that you're not going to have a network of robotaxis running around where you're going to suddenly gain a lot of share. Most of the models, including ARCs and everything, is a supply-driven model where they take, okay, here's the number of EVs in the network times number of hours a day, and this is the price per mile, and that has nothing to do with demand. And so to me, if a lot of people can do robotaxis, which I think they will be in a few years, it's hard for me to think that Tesla's going to gain 100% market share on it. So I put no value in robotaxis. The way I model for FSD is I take the number of EVs they sell in a year. I put a take rate down. Right now I use about 12%. Put the $15,000 into their charging and split it between, the lease, which is $199 a month, versus buying it. I can recognize it now, and that's how I model it. But I have zero value in there for robotaxi, because I just don't. As a typical analyst, I need to be able to see it's going to work, and it's going to be able to drive itself. And it looks to me like what they're headed to is more, level 2.5 driver assist than robotaxi, which is, it really does drive itself. So I just don't have any value for robotaxis in there other than the FSD, which they can charge, $15,000 times the take rate. So I put no value on it in my numbers.
Yeah.
It's probably too conservative, but look, my job is to be conservative. I always want to be, I don't want to be viewed as the adult in the room, but I want to be viewed as my numbers are realistic. And so when I put a number out there, I want people to say, okay, that's a realistic number. And if they want to add for Robotaxi, that's fine. Let them do that.
Yeah, definitely. One question back to the case. We got, why should the judgment be paid by Tesla shareholders? This isn't our fault.
Yeah, and the people who are suing them are Tesla shareholders who owned the stock at the time. It's the class of people who owned Tesla in 2018 who were damaged by his tweet of funding secured, who then, and this is why I think it's going to be hard to put damages on this, who either, the price went up and then it collapsed, and then, like, where do you figure out what the line is for how do you figure out damages? And I haven't seen the plaintiffs argue this yet, and I don't think the judge has issued any instructions on this. So I agree with you. It's hard for me to say that Tesla shareholders today should pay Tesla shareholders in 2018. The only reason the logic makes sense is because the board is a defendant. Elon's a defendant. Now, if Elon's found liable, and you got to go back to the SEC case, Tesla paid $20 million because the board, quote unquote, wasn't doing their job, and Elon paid $20 million. That was the fine. Which, if that was the judgment here, that's nothing. Okay, the stock would rise because they'd shrug it off. But the theory is that the board wasn't doing its job in policing Elon, so therefore the board has to pay something. And if there's no director's insurance to pay for it, and I don't know how much director's insurance we have, somebody's got to pay, and that would probably be the Tesla shareholders. So I think that's the theory. I still have a hard time figuring out how you get a number that's north of $1 billion, $2 billion, just doing it back of the envelope. I just don't see it. I don't see how the number's going to be that big. But I don't know how the judge is going to instruct the jury to figure it out if we get to that point.
Yeah. Definitely.
But that's the theory. The theory is the board is liable, and if the board doesn't have insurance, then Tesla will step in and pay for the Tesla board. And to me, that's kind of weird because you got Tesla shareholders from 2018 being paid by Tesla shareholders today. That's odd, but that's the way to work.
Yeah. One other question from Zachary is, how do you factor in other verticals like insurance, Texas energy company, even solar potentially as well?
Yeah, well, I take what they have today. So I build in numbers for energy generation storage, they call it, and services. So it's, it's all the charging stations they have. I don't build anything in for insurance. I don't build anything in for, Optimus. I don't, if I can't see it and measure how much share it's going to take, and this is the way my brain is wired because I grew up as an analyst, I have to be able to say, okay, the market is X, the share is this, that's units. What kind of price do you charge? What are the costs? And that's how you figure out profits. So I can't, like, for instance, Optimus, until I can see the product, I can't do that. And that's why I don't build in Robotaxi. Insurance, I probably could if I put my mind to it. I just assume it's, kind of icing on the cake if they could sell some insurance, but I don't think it's going to be a big number. I think the biggest change I've had in my model is by putting in the mega packs, because it's, Lathrop is such a big factory when you have 40 gigawatt hours of capacity. And again, for my model for 2023, I took that number in half. So I have 5,000 units going through my P&L, and I recognize the revenue half and half. So half it goes to 23, half it goes to 24. And then I put a 20% gross margin on, which everybody says that's too low. Well, maybe, but in the first couple of years, they may not be able to get it out there at 50% margin. So my number for 2023 for energy, I think I've got in, it works out to be, I don't know, maybe $5 billion of revenue, and it might be $1 billion of profit, up from, I think it was 240 for 2022, and I think 3.7 was the revenue number. But the street is like 4.5, and the profit number they have for 2023 is like 350, up from 250. So I'm way above the street. And what I always tell people is, I don't want to be that much above the street. I don't need to be. I'm giving them credit, but I don't want to give them so much credit that then they miss. And I think that's something bulls have to take into consideration, because the retail bulls have been too optimistic about things in the past. And you got to be a little bit conservative, or, what I find is nobody's going to listen to me. I'm not going to have credibility.
Yeah. No, makes sense. Here's the next one. Why does Gary think Gordon would suggest or with
So here's another thing that's going to happen that I think is interesting for fourth quarter. They have 21 billion of cash at the end of third quarter. They'll probably have 24 to 25 in the fourth quarter. Multiply that times, let's say 3%. Okay, that's what is that? 600 million a year. That's 150 million a quarter. And so that's a big number compared to what they've shown in the past for interest income. And so in my model, I got 21 billion going to 25, and I got that going to 40 next year. I invest that cash at 4%. So in my model, that interest income line explodes. If they were to instead buy back stock, that's even more explosive, because instead of investing it at 3%, if you can buy back stock at, an IRR, internal rate of return, in the 20s, which is the number, you could get a lot more because you're reducing the number of shares. You could get a lot more impact if you do that. So I don't know if Gordon is saying anything to do with the cash. I really do not read his reports. I hear him on CNBC because he goes on there a lot, and it's funny. I was joking with Ross this morning. I said, you guys got, how many people you think viewed your segment from yesterday? He says, I don't know, 2,000. I said, 30,000 people watched the two of you. And that's, again, the sad thing about Twitter. People love to see fights, and I don't know. I don't know who won the fight. I think Ross won the fight, but Gordon is, he's a very excitable guy, and Ross actually was pretty steady, relative to in the past. But I don't know what Gordon's thinking the cash is going to be used for. What I hope they don't do is start buying stuff. If Rivian goes up for sale or Lucy goes up for sale, I would hope they don't do that. I would hope they don't buy a restaurant chain or anything. What I want them to do is give back some of the cash to the shareholders and use it when there's bad PR out there that causes the stock to fall. And I just think that's a better use of the cash than just letting it build up as cash. So,
yeah,
that's me.
Well, I want to do a quick time check. How are you on time? Do you want to take one last question?
Yeah, we can take one more.
Okay. Where I just had it obviously in front of me. Oh yeah, I think. Okay, yeah, this is the last one. So, could you ask Gary what he thinks will happen in the upcoming shareholder meeting in terms of Tesla board changes?
Okay, that's a good question. I think it would be, and again, this is not an attack on the board, so don't construe it as that. I think it's good to always have fresh thinking on board. So when I was the CEO of Janus years ago, and I was a growth guy, and I brought a value guy on, to shake up the board. I think it's always good to have at least one or two new people coming on the board, because boards get stale. They get into their habits, and everybody plays a role at the board meetings. And I think having a retail representative on the board would be very helpful. And whether it's Ross or somebody else, I don't care. I just think somebody should, come into the boardroom who's been on a board before, and at least, come up with some questions and, thought-provoking comments. And it's not to shake the board up. It's just you want new blood on the board occasionally. And so I'm a fan of somebody else going on the board. But I also, and I've told Ross this, I think it should be friendly. And in the end of the day, you want whoever goes on the board for Elon to invite that person in and, to accept that person. You don't want it to be a hostile situation. And so hopefully, at the upcoming board meeting, there will be somebody who goes on the board who hasn't been there before. And that, I think, would be a good thing. It could be a very exciting event. It could be boring. Most board meetings I found are pretty boring. They go according to the script. And because the stock went down so much in the fourth quarter, it was down 55%, NASDAQ was flat. I think this one will be more exciting because the boards are supposed to, work for the shareholders. That's their job. And I think you'll have a lot of people that'll show up and say, what are you doing for the shareholder? But in the meantime, the stock could rebound sharply between now and then. And I think the board meeting is going to be May, and maybe there won't be fireworks. So I don't know. I would hope there'd be somebody new added to the board, but you just don't know who's going to throw up their hand and say, I want to be on the board.
Yeah, no, definitely.
What do you think? Do you have an opinion?
I personally think that it'll be interesting to see obviously who they come up with, but I would agree with you. I think some of the people that have been voicing to be a board member, personally, I'm like, what experience or, operational value are you adding? That's my biggest thing is each board member that needs to be added, in my opinion, needs to have probably some type of experience of like taking companies, and specifically potentially auto industry and even just in general, but just there needs to be some value there versus being, potential voice of retail
Retail.
investors, or
I agree with
that's
that.
just my opinion. Not throwing shade at any specific person, but every board member should bring, some type of expertise or something, some type of clout with them. Especially some of the companies I've even worked at, the people that we've always brought in typically bring in some type of expertise or something that we don't have, or provides us access to an audience that we didn't have access to before.
Right.
So I think, that's my issue with just, saying like, we throw our hands up and we just, ask for a new board member. But I think, there needs to be something of intrinsic value that they legitimately bring.
Right. Well, look, and I'm a friend of Ross. Ross is a communications guy, and I do believe that in the environment going forward, Tesla needs more of the soft skills. And up to now, engineering and manufacturing have gotten it to where it is. But I do think going forward, they have to pivot like Apple pivoted and develop more of the communications, marketing, PR skills to bring it, down the path or up the path to $3 trillion in valuation, which is where I think it could be. So I agree with your point. They have to bring something new to the table. But again, somebody like Ross, and I like Ross, and he's a friend of mine. He's a communications guy, and when I look at the board, that's not a skill set that it jumps out at you, and so I think he does bring something to the board that is not there today.
Yeah, no, definitely. So
It
it'll
shouldn't be
be,
hostile. It shouldn't be hostile. It should be,
yeah.
the Elon and the board should if they want that skill set, they should reach out. But I don't like hostile situations because what happens if you're an activist and you get on the board because you win the vote, then you get a schism in the board, and they you don't get all the information, and it's people working against it. That's not effective. And so any board member has to be somebody who's welcome, and all the information is shared with. And Elon's got to say, look, I want to work with this person because they bring something new to the table. And so if that's the case, then they should bring the person on. If that's not the case, then they should just keep doing what they're doing.
Yeah, the last thing is you want politics within the board, and it just becomes a complete mess.
Yeah, yeah. But you want people. Look, I've been a CEO. You want board members who are going to challenge the CEO, and not in a way that's attacks, but just say, "Have you thought about this?" And I think Larry Ellison, from what I understand, did that. And he's a strong-willed guy, and he could stand up to Elon and say, "Elon, have you thought about this?" And I think that's good for a CEO. It's not like you're overruling him or circumventing him, but I think having somebody who's got the guts to stand up to a CEO and challenge him, and look, at the end of the day, the CEO gets to make the call. I think that's healthy, and I believe that Elon probably realizes that's a healthy thing. I think he probably liked having Larry on the board, and I think you need that.
Yeah, I definitely would agree. Well, again, I want to be conscious of your time. Follow Gary at GaryBlack00 on Twitter. Again, he's a managing partner of the Future Fund, based out of Chicago. Really, enjoyable time. Looking forward to having you at the Tesla Takeover in July, specifically with Ross, Sandy, and Kim Job and some others that we're locking down. But really appreciate your time today.
Okay, thanks, John. Appreciate it.
Sounds good. Thanks, everyone.
Okay, bye-bye.